What's up, everyone? So we're going to discuss the AMC lawsuit. You may or may not have heard about it, and depending on the source that you've heard about it from, the information that you received may or may not have been accurate. We're going to be reading straight from the document itself, as always, and I have summarized this with the help of ChatGPT and some other summarization tools that I've created. So if you hear something you don't like in this video, remember, don't get mad at me. I'm just the messenger reading you what this lawsuit is factually about. So let's go ahead and look into it. So here is the front page of the lawsuit filed February 20th, 2023 at 4:09 p.m. Eastern. And this is plaintiff AMC Entertainment Holdings Incorporated, Adam M. Aaron. I'm sorry, plaintiff versus AMC Entertainment Holdings, which is Adam M. Aaron, Howard W. Koch, Kathleen M. Paulus, and other board members. This is the cover page of that document that was released in February 20th. We're going to go over the nature of the action in this one, and I'm going to give you the text, and then I'm going to summarize what it all means. So from the beginning here, paragraph 1 says this action challenges a course of complex and disloyal corporate engineering by the defendants, described by AMC's chief executive officer and chairman, defendant Adam M. Aaron, as an exercise in 3D chess, devised to achieve a simple aim: eviscerating the voting power of AMC's Class A stockholders in order to force through approval of a proposed dilutive share count increase that those stockholders repeatedly had rebuffed and were not willing to support at the corporate ballot box. In 2020, the COVID-19 pandemic prevented the American public from gathering in public spaces, with significant deleterious impact on the revenues and operations of AMC. By late 2020, numerous hedge funds took widely reported short positions in AMC stock. In response, retail investors rallied around the company and took positions in its stock in an effort to defeat the short sellers. Aaron embraced this movement and promoted himself as the hero of retail investors. By June 2021, more than 80% of AMC's shares were held by approximately 4.1 million retail investors. So what this means, summarized in an easier to understand format. And we're going to go through the whole nature of the action in summarized format from here on out. So basically what we just read, this legal action challenges the defendant's complex and disloyal corporate engineering aimed at diminishing the voting power of AMC's Class A stockholders to force approval of a proposed dilutive share count increase that stockholders had repeatedly rejected. COVID-19 pandemic in 2020 severely impacted AMC's revenues and operations. Hedge funds took short positions in AMC stock, prompting retail investors to rally around the company and buy its stock to defeat the short sellers. AMC's CEO, Adam Aaron, embraced this movement, calling himself the hero, and by June 2021, around 80% of AMC shares were held by 4.1 million investors. Here's the next part here. I'm not going to read it verbatim. I'm just going to go straight into the summary. If you want to pause and read this verbatim and then compare it with a summary, you're more than welcome to. But here's the summary of that page. Aaron and his fellow directors grew frustrated with the retail investors' ability to exercise their rights under the DGCL. After raising capital by selling nearly all remaining authorized shares of Class A common stock, AMC proposed multiple times to amend the company's certificate of incorporation to authorize the issuance of additional shares. But these proposals were repeatedly rejected by existing Class A common stockholders. And in response, AMC embarked on a complex corporate engineering plan to secure a dilutive increase in the number of authorized Class A shares against the existing stockholders' opposition. This plan commenced on August 4th, 2022, when AMC announced the creation of 10 million new shares of Series A convertible participating preferred stock, or the preferred stock, with super voting rights, or 100 votes per share, and a corresponding economic interest in the company. The preferred stock shares were deposited with none other than depository institution Computershare Incorporated, pursuant to a deposit agreement dated August 4th, 2022. AMC directed Computershare to issue AMC preferred equity units, known as APEs, which were designed to be equivalent to the company's Class A common stock in terms of economic and voting rights. The creation of the preferred stock and APEs aimed to neutralize and circumvent the voting rights of AMC's existing Class A stockholders and force an authorization for an increase in the number of Class A shares. AMC distributed an initial tranche of about 516 million APEs to existing stockholders on a one-for-one basis, and then sold more than 125.9 million APEs to new investors. AMC's strategy became evident when they announced a multi-step agreement with Antara Capital LP, allowing Antara to obtain over 257 million APEs, representing nearly 28% of all outstanding APEs. The agreement required AMC to propose an increase in the number of authorized Class A shares and a conversion of all existing APEs into Class A shares on a one-for-one basis, followed by a 10-for-1 reverse stock split of the Class A shares. This announcement led to a significant change in the trading prices of APEs and Class A stock, with APEs experiencing a significant increase in value as the market anticipated the approval of the proposals. In the last section, the plaintiff argues that AMC actions have breached their fiduciary duties and violated the DGCL. The plaintiff claims that the director defendants engaged in disloyal conduct by approving the creation and sale of the preferred stock, imposing the depository voting requirement, and arranging for the impending vote on the proposals for all the purpose of circumventing the will of the company's existing stockholders. The plaintiff also alleges that the issuance of the preferred stock was not properly authorized under the DGCL Section 242B, as Class A stockholders were not provided a vote on the creation of the preferred stock, which adversely affect their existing power and rights. The plaintiff seeks a judgment that the director defendants have breached their fiduciary duties to the company's Class A stockholders, and that the creation of the preferred stock was not properly authorized pursuant to the DGCL. They also seek relief, including a separate class vote for Class A stockholders on the pending proposals and other relief deemed appropriate by the court. Now, what is the DGCL? You've heard it a lot in this presentation. The DGCL stands for the Delaware General Corporation Law. It is a set of statutes governing corporate law in the state of Delaware, and Delaware is known for its business-friendly corporate laws, and a significant number of companies, especially publicly traded ones, choose to incorporate in Delaware. The DGCL covers various aspects of corporate governance, including the formation, operation, and dissolution of corporations, as well as the rights and responsibilities of corporate officers, directors, and shareholders. So that was the nature of this document. Now, I'm going to stop reading from the facts and give my opinion here. I was heavily involved in AMC in early 2021. I voted all my shares in. We looked like we owned the float. Everything was going great until May 4th of 2021, when Adam Aron came out and he postponed the original shareholder meeting when we would all have the votes required to own the float. He pushed that back to, I believe it was June of that year. And the reasoning behind that is unknown, but there were some other shady things as well that came up, such as AMC's CEO, Adam Aron, joining the board of Centricus Acquisition Corporation, which is in cahoots with Citadel. I'm sure you've all heard of that. If not, I can go over that too in the future. But those are facts that happen, and those are what made me start wondering and start thinking about the bigger picture. And it did not sit well with me that we clearly had all of the votes needed to own the float back then, but then all of a sudden we get a postponement, and then we come up short by 20% by the next rescheduled shareholder meeting. That was the moment on May 4th that I started thinking, okay, maybe something doesn't add up here. And I started looking into markets, how they operate, how they work, and one thing led to another, and then here we are now. That's essentially why I got off of the train back in 2021, because all I saw was continued dilution and pushbacks from the CEO, which I did not like. That's the only reason. So that's just my opinion on that and why my personal choices took place back then. But as far as this lawsuit, I will continue looking at the developments that have occurred since the initial filing. But basically, the lawsuit confirms everything that I originally thought in the beginning. But of course, there could be more to it, so I will keep looking. Just wanted to share this first part. So that is the nature of this lawsuit.